Happy holidays. Greetings, Dr. Jeffrey Scott. This is my weekend market update for the week ending Sunday, 12/21/2025. If you watched my video on Thursday night, I kind of showed you how, from a seasonality perspective, Friday was a day that was supposed to go up. So, did Santa arrive right on schedule? Or was this just artifactual caused by quadruple witching? I don't think we can tell you. I think we can look at the supporting evidence, look at the underlying stocks, and wait and see what the market's going to do on Monday. I looked at my portfolio. Actually, I don't look that close. I looked at the P&L, and it was a great day. But it was a great day because my two biggest positions, and much of which were expiring, was Labu and Nugget, and both of which I probably should have sold earlier in the week. And we ended up making up for the Friday, Monday, Tuesday, Wednesday prior days sell-off. So good news was it was a great day. Bad news is there going to be follow through Monday? I don't know. Again, my email address is marketmripro@gmail.com. Google Group Top Down Trader, www.marketmripro.com is the website. Um, as always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate my tools of top-down analysis, how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I am a owner, intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. I've got tools in multiple platforms, but if you bought it on Metastock or TradeStation or Wealth Charts, I use them the same way, regardless of which tool set I'm using, although there are differences in the tool sets. Speaking of wealth charts, I do my video Sunday night, Monday morning for stocksanddocs.com, and there'll be one this week. So look for that Monday morning. I assume the crew of Become a Better Trader will be up there and they'll post it for me. My Google group's called Top Down Trader. Why should you join? I stick my videos up there. Sometimes I don't post them on YouTube. Um, I give discounts from time to time on my stuff. I hold educational programs for that group as well. Love to have you join. Why not? It's free and I'm a nice guy. And if you want to quit, you don't have to ask permission. You do it yourself within Google Groups. And I block spam, so love to have you. Is there a recession in our near future? I always ask this because one day I'm going to say, uh-oh. And when I say, uh-oh, it's a problem because markets don't like recessions. And if we're in a down market, a bear market, and we go into a recession, those bear markets are twice as bad. So we know we had a cross of the zero line after the yield curve inversion on pretty much wherever you look. This is 10 minus 3 months, 10 minus 2 years. And if you notice, going back to the 80s, every time you've done that, you've had the gray bar, which is a recession. So we're going to have a recession. Often the second year of a presidential cycle with midterm elections, especially with the wackiness that we have right now going on both sides. I'll be apolitical. This could be a doozy of a year, and I expect more volatility. It won't be as easy to make money next year. And will we get a recession? Now, one thing we'll know before is we'll start to see ticking up the credit tightness. Certainly during a recession, credit is tight, but we're not even moving up at all. And then the other thing is you don't get a recession until you're minus 20 on the Philadelphia Fed Diffusion Index, and we just got a reading this past week at 10.2. So I would say, yeah, there's always a recession in our near future, but nothing imminent. News and earnings in red are all these delayed things. I don't know what October GDP and durable goods and industrial productions and capacity mean. November industrial production, well, that's not too delayed. I think that's probably on time, as is capacity. I'm I am wondering about consumer confidence for December. That could be a big mover. And jobless claims. Notice what we don't have. No Fed speakers. So this could be a week where the markets move without a whole bunch of manipulation from talking heads. The other thing is, here are the 2 weeks we're going into. I think there's one stock that's got any type of coverage that's got earnings then, but certainly none of the ones that we talk about. But we start kicking in on the 6th. And just to remind you, fans of Netflix seasonality, which, by the way, doesn't always work. It works most of the time. If you look at 8.5 out of 10 as being most of the time, would be on the Tuesday night, Wednesday of the week that starts on the 17th. It's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. All right, chart time. Here's my daily briefing. I use this to get a sense of what worked, what didn't work. Bitcoin had a big rally on Friday, and that really was along with the market, but Bitcoin as high as 5.73. It opened high, it closed high, and closed in the middle of the range. Q's up 1.3, Russell 0.84, Spider 0.61, Dollar 0.32, and diamonds were up 0.13%. Volatility was down 3.73. There's the comment I made earlier. My stuff looked really good, but I was heavily weighted in gold and biotech, two of the things that work the best. That, you know, top-down investing, you try and go to those things that are working. If we look over a 5-day change, it's not as pretty, but it's not horrible either. Over 5 days, the Qs were up 0.5%, dollar was up 0.5%, Spider is relatively flat, down 0.17, diamonds down 0.88, and Russell down 1.21. And even with that massive move on Friday, Bitcoin was down 2.5%, and VIX was down over 5%. So I would sum up those by saying it was a good day on Friday. Without showing the RSP, looked as good as the spiders. It broadened out, and I'll take it at that. It was a positive day. Now, what else can I tell you? I can tell you that new highs minus two lows on the NYSE are positive, less than where they were a week ago. And new highs minus new lows at 52 weeks on the NASDAQ are still negative. And especially on the NASDAQ, there's still quite a few new lows. So we're not totally in the clear here. If we look at sectors and industry groups, in the 1500, the NASDAQ and the NYSE, you could see we either at where we were on Thursday or a little bit better. At where we were Thursday, actually a little worse on the NASDAQ, better on sectors, worse on industries in the NYSE. And as good as it felt for me, it kind of was a 50-50 day. You could see 51% of the S&P 1500 was up, 52% of the NASDAQ, and 50% of the NYSE. So, was I just lucky then maybe that I had a good performance? Or maybe it was reversion to the mean because I took some heat earlier in the week. So as we look at this, we'll go over here. And on Friday, what was leading? Technology was up 2.16%. Over 5 days, it was up 0.63. Industrials, healthcare, financials, materials. On the negative side, utilities, staples, and interestingly, discretionary. So we've had a lot of rotation over the last couple of weeks, a lot of rotation. And if we look at themes on Friday, it was uranium, blockchain, silver, biotech, metals and mining, defense, semis, gold, clean tech, telecommunications, and all these are up over 2%. So if you had a good day on Friday, there was a good chance you were in some of those sectors or themes, and many of those have been rotating around this week. Well, was it a good enough day to improve the timing model? No. We've got multiple days of a sell signal on the daily spiders, Qs, and the Russell. The diamonds are holding up. However, on the daily model, we did close above the WMA across the board. Now, the WMA is a 30 period, and what's kind of cool to me is if I was to put a 17-day simple or a 21-day exponential, it's really will look the same. They're very close. I was just listening to something on YouTube, IBD stock market review with Mike Webster. I listened to that in the background as I prepped for this, and I really like Mike Webster. That's why I was listening. And he was cautious, and he said he'd like to see three lows above that 21-day EMA to get him excited. Um, well, we'll see if that correlates about when the signal changes. But right now, 3 sells, 1 buy. But this is not bad sells. These are good sells where it looks like we're resolving. Don't know that for sure, but that's my gut. The weeklies are all positive, so uptrend, intermediate. The monthlies are all positive, uptrend longer. And on the short term, we've got a mild pullback. So this is where I would put the classification of pullback in uptrend. But boy, I don't feel that uptrend is as much under pressure as we've moved up off the lows after the last couple of days. If we look at the US index ETFs, we start with the spider and notice that we are now in positive seasonality at 5 and 10 years. Notice the close here on the 50 on Thursday and a move up, or a touch of the 50 on Thursday, a move up on Friday. And that actually looks to me more like something I would buy than want to sell. Obviously, I'd like to see it move up and clear that 17-day exponential, but I think the spider daily looks good. Volume was massive on Friday, but it was quadruple expiration. So I put less credence on volume. Diamonds is the same thing. We got good seasonality coming up. We closed right under the 17-day above the 50. Nice little V bottom, perhaps similar to what we had back here, and just a little bit above the 100. This one occurred on the 100-day. Is that bullish or bearish looking? I think it's more bullish than bearish. Let's take a look at the diamonds. The diamonds are the one daily chart still on a buy signal. What's not to love? You're above the 17, above the 50, above the 100, and above the 200 with positive seasonality. So anything can happen. It's a weekend. There's wars, there's deaths, there's events, there's terrorist attacks, there's Japanese raising rates for the carry trade. But if I had to guess right now, the market looks like it wants to go higher, and maybe Santa is coming to visit. And you got the Russell and a nice uptrend pullback, pulling back here to the 50 and breaking back above the 17. Good seasonality, and the Russell's probably behaving better than the others. VIX, we talked about it being a down week for the VIX, which is a good thing. And if you look at the VIX, you could see we're now getting down to that level that we saw when we were resting during those days of July, August, and September when our portfolios really flew higher. Positive for the bulls. And then lastly, if we look at the dollar, here it looks like the dollar's in a strong uptrend and maybe it's concerning, but it did pull back. But if I just click that once, you can see the dollars are well off the high. I kind of thought we'd get into this area where we had a big gap. It turns out we got into this area. But right now, if anything, I'd say the dollar is not a problem. It's still low. Commodities. Wow. I mentioned nugget. Well, gold and silver have been on fire. I mean, gold's going to have to get above that dash line to have an all-time high or an all-time closing high. And as you can see, it's got a ways to go. But boy, every time I draw lines about gold on the chart, this is when I talked about it, breaking out here, major run, breakout again. Gold has just been such a good behaving entity. I'm still long some nugget. I did take profits, and I'll continue to take profits on the way up because you just don't know when you're going to get a bar that looks like this. Silver looks, I mean, can it look better than gold? Yeah. Does it look like a climax run where at some point it's going to stop and you're going to get a deep bar like this or even longer? Yeah. So would I continue to take profits on gold and silver? Why not? If you end up at the end of the week with 20% less gold and silver and you sell it at an all-time high, no one's going to cry for you. And then if the market was to pull back after you took some profits, then you're going to be pretty happy. Now, long term, are gold and silver going to continue this way? I mean, there's a lot of people that think the demographics support that. But every time it's happened before, it's ultimately came back to ground level. Oil struggling under this line. And I thought with Venezuela, we might see the oil perk up. But at the same time as we got Venezuela, we got more and more talk about Russia and Ukraine ending their conflict. And even if the U.S. doesn't buy Russian oil, if they take off the sanctions, the market's going to be flooded. Natural gas, man, it teased me. I thought we were going higher, and I should have continued to think it was dead. We're back down to that resting lows. I'm not touching anything natural gas related until it gives me a signal. And then over here, I like to track every week and every day the 10-year and the 30. But below that 200 is healthy, and we are plus 0.75% on Friday. And on the 30-year, plus 0.54. It's above the 200, but here I want to make sure it stays below 5. So as the Fed cuts and the long part of the yield curve goes up, it makes you somewhat concerned about things like, is the bond market unhappy? Does the bond market think we're stimulating more and more inflation? And those are things that could trip up the bull market that we're in. The buckets, at best neutral, maybe starting to look a little bearish as you're building up stocks on the left-hand side with very few things in the top three. But is that a signal of anything? No. How about market breadth? So here's the NYSE composite, the NASDAQ composite. Both look great. Nice reversal. Was this a flag after this poll and we're going higher? Maybe. Nice reversal on the NASDAQ composite. As I mentioned, big volume on Friday because of quadruple witching. Stocks above the moving averages didn't do much. You can see new highs minus new lows positive on the NYSE, not on the NASDAQ. AD lines positive, but not that much. Up down volume. These two Hindenburgs are interesting to me. Um, I don't see them on my other platforms. And what we're doing is we're taking the NYSE and we're removing all the preferreds and bond funds, and we're doing it with different filters. It is clear that we're looking at a different NYSE composite than others, and ours should be doing it automatically, so it's constantly updating. And since the makeup is so important, that might explain it. The fact that you have one, though, means there's a lot of people selling it called pros and people buying it called us. It's a sign that has preceded every major market pullback going back to the Great Depression. I mean the 20s, not like the 1920s. Um, and I just heed it. I pay attention to it. It keeps in the back of my mind that maybe all is not well. But right now I trade the charts, and the charts look pretty darn good. If I look at the market, that's the market breadth with the 13-week. The most important thing on this chart is this green one right here. And that's the 13-week new high minus new lows. And when it gets above 90, I get nervous. And we've got 67 on the Spider, 64 on the 1500. We got 64 on the Russell, and it looks like a 38 on the NASDAQ. That tells me there's no reason this market can't go higher. There's a lot of things here. There's AD lines. Are the AD lines actually going up while the market's going sideways to down? What does that mean for us? Is that positive divergence we might be seeing? Something to keep an eye on. Other things up here. Seasonality, I don't talk much about it. I happen to be a big seasonality person. Um, I like to do a couple different things with seasonality in the tool. So let me just show you some of the things. We're working on the user interface. I think we can do a better job. Um, this is showing you there's typically 5, 10, and 15 years. You can see the colors over in there in the upper left. But up here is a scanner. So I can scan for how much of a change, how many times out of 10 or out of 100 is it positive or negative. I can scan on a date, I can scan on a month, I can scan on a symbol. So what I did here is I scanned on Monday. And I said, what things have the best seasonality if bought on Monday? And let's look at just 15 days and let's rank by 15-day edge. Well, this one's garbage. I don't know why it's got such a big number. It's probably a cheap stock. So I'm not going to worry about this one. Maybe it's not even traded. So IRTC, iRhythm Technologies, healthcare stock. What does this tell me here? What does 1264 mean? It means if I go to 15 days, which is going to be here, it tells me that it's up. It's had 10 of the last 10 years. It's up 87.5%, which must mean there were some ties, have an average return over the next 15 days of 14%. HPK, not interested because it's getting killed. I might just go down the list and see GKOS, a healthcare stock. We know healthcare has been doing well. Over the next 15 days, it's got an edge of 8.22. That's not that big, but what's it tell me? It's got an 88% chance of being positive, and the average return is 9.25. What if I want to go out 45 days? Let's look at Fortinet. Is that what this is? Yeah, Fortinet. This thing, I don't think it was a split. I think this thing had a bad day. But over the next 45 days, I got to find 45 days now. 35, 40, 40. All right, here's 45, and here's a hit rate of 45. All right, so let's go back here. Search on 45. So over the next 45 days, this has an edge of 1762. So it tells me it's up 80% of 12 years with an average return of 15.78. So if you're a fan of seasonality, you look for this to find some really strong seasonality. Now, one stock that has historically been great this time of year, but I'm not sure it's going to be great this year, is Netflix. And why may it not be great this year? Because Netflix is going to have well, it's in a fight now with Paramount over Warner Brothers. So let's just look at a 30-day. Don't see one. 45-day. Oh, I gotta go up to the top. My bad. So this used to be a great trade, but if you bought this on the 23rd of December, it had a hit rate of 81% over the next 45 days and an average return of 18.89%. This was the king of seasonality, but it kind of looks like seasonality on this stock isn't nearly as good as it used to be. And as I mentioned, considering that we're dealing with that takeover battle, which is hurting the stock, I probably wouldn't be chasing it. If you're a fan of fundamentals, financial reporting, that's not my gig, but I know a lot of people are. So the same type of thing, if you type in the symbol you want and take a look at it, what you're going to get are all kinds of fundamental information built in. Now let's go to ratio charts where I can look at where is their strength, financials, industrials have turned up, technology after selling up on the very short term looks better. Discretionary has been good. Staples started to weaken. Energy's weakening. Healthcare is neutral. Okay. And now I might go to a couple other ways that I might look at sectors is I put the sectors on the timing model. And this is the daily on the sectors. And what I thought was interesting on Friday is we did turn a buy on the technology as a new buy, as is on industrial. Friday was a pretty super strong day and no new sells. All right, let's take a look at the JAS layout. Now the JAS layout is where I make most of my stuff happen. So what I ranked here is based upon the large body of stocks that I'm looking at, and we'll do it differently today. Let's just look at the S&P 1500. So these percentages are going to change. What we're doing is we're going to create sectors and industry groups from the S&P 1500. And and then we'll do some top-down analysis on them. Typically, I do the broader, but let's do the narrower. So top three here we go, technology, healthcare, and industrials. Very different on the much broader based. Then if I rank the industry groups by percent change, all right, here you can see BioMarin. What's really bizarre, they were not acquired. They were the acquirer. Somewhere in here, biotech bombshell. BioMarin's 4.88 bet ignites Amicus shares in rare disease power play as it acquires it in a $4.8 billion deal. One out of 10, 15, 20 times when one biotech buys another biotech, they both go up, and usually because Wall Street really likes the deal. Well, guess what? I think Wall Street was getting concerned about the pipeline here, and this wakes up the company. And BioMarin, you can see February 18th, 94 coming in versus 92. So you're going to get rid of that red. If there's any surprise, it's had big surprises. You'll see that grow even more. It's got some revenue. Um, I'm kind of interested in BioMarin here because I don't know why it would go up. Now you might say, but Jeff, the high jump's 100. We don't count the high jump when the current bar is actually touching the 200-day moving average. So I wouldn't be concerned about that. Down here, massive volume, CPR, gap, volume, breakout momentum, recent squeeze, relative strength, OBV look good. Just so unusual to see that pattern after you buy somebody. Usually you sell off. That perks my interest. VICR, boy, this thing's tough to buy here. Big gap up, sideways move, breaking out again. You got your EMS, CPR, volume, breakout momentum, good relative strength and OBV. We have any fundamentals on this? Earnings are not to February 19. Big PE, no dividend, but look at the growth rate. What do they even do? Develops, designs, manufactures, market power components and power systems. I wonder if there's a data center play because everything data center related was kind of up on Friday. PTCT, another biotech play. I like buying pullbacks and breakouts here. It looks pretty. Micron, this thing looks like it might be too hard to chase, and it certainly went up a lot on earnings. Then I looked at the earnings. It's expecting 447 versus 319 versus $1.56. Look at the earnings per share growth. Look at the positive surprises. Look at the revenue growth and the revenue surprises. I know people wonder, can this actually continue when you have things along the lines of the entropy in the data center world? But boy, this is impressive, and it's on my buy watch. Insight, a biotech that, what a perfect looking chart. Massive uptrend, pull back to the 50. I'd rather have bought it on Friday as it was crossing the 17-day. Massive volume, CPR, volume breakup momentum, relative strength, and OBV. Huntington Inglis, I'm sorry, not illness. That's the doctor in me. Beautiful uptrend, similar chart breaking out. Arista Networks below the 50. AbbVie, I always call this the biotech that thinks like big pharma. Why? Because they pay a 3.5% dividend. This is a company that I thought was going to roll over because of loss of exclusivity, meaning sales and profits on Humira, but it's held up well. WWD, electrical components, I believe, has a play with data centers. Big move on Friday. Western Digital, disk drives like Seagate, Vertex, another healthcare biotech sitting here. Looks interesting. So there's a lot of interesting stocks here. Gilead, I showed you Insight. Again, nice uptrend, and you have the chance to buy it right off the 50. After a massive value, there must have been something that happened. And nope, earnings came out in October. pays a 3.4% dividend. So you can always look here and see price cuts for Trump. A lot of these companies are sort of beating their chest and bragging about the deals they made with Trump. You don't brag about a deal you made with Trump if it's going to kill your company. You probably brag if you did better than you thought you would do. So from a top-down perspective, there's a lot of healthcare and technology stocks there. I showed you a couple that look good. I think those that have the tool, it's a pretty easy thing. I clicked on the S&P 1500 for my universe. So if I take this off, I've got 1,502 stocks. I rate them by percent change. I rate them by industry percent. I took the top 10 industries and I looked at stocks based upon how many impulse indicators they had. Now, a lot of us also like to do bottoms up. Bottoms up means I'm going to ignore the, we'll go back to the big impulse list. I'm going to ignore the markets and industry groups, and I just want to go for the prettiest looking stocks I could find. And give it a second to run. Okay, now I'm back with 3769 stocks. So my universe under the base includes the NYSE, the NASDAQ, and the Amex filtered for $1 and 100,000 shares. So the number is always around 3,800, but it will vary from day to day. And I have a number of different scans built in. If you want to see which stocks are above the 200 MA, you have to, and you see right away there's 2355. That's not really what I want to scan for. If you wanted to see stocks that are crossing over the 50 today, I mean, it's pretty cool. So you can see which stocks are above the 50. So we just look at one. This is crossing down below the 50, even better if I was looking for shorts. So I'm crossing down below the 50. I got crossing up the 50. So I could look for stocks crossing above the 50. Um, and that should give me, that's a small list, only 44. That's not a good one to look at. How about this one? And you can see it's should be crossing above the 50. You have to look at where it closed. I guess it doesn't matter if it closes above. It just crossed up above the 50 today. So I've got a number of technical scans. Now that one, all right, I'm going to have to talk to Praveen because that one doesn't look right. That's what it says above the 50. All right, I'll have that fixed shortly. But what I really want to go to is my favorite scan, which is called the A plus scan. A plus scan is going to look for stocks with 2 days of momentum in a row. We call it the double momentum. I got to take off all those filters. Try that again. A plus. All right, this is a bad ticker. It's not a bad ticker, but it stopped trading. And since it stopped trading, this is the last bar. You got the double momentum, but we don't care about that. BTSG, Bright Spring Health. This one looks very interesting. Big uptrend, sideways move, breakout, some volume. You had volume, momentum, double momentum from a squeeze, relative strength up, OBV up, not extended. HWM, actually took a position in this one at 345 when I ran the scan because it's updating throughout the day. And you could see breaking above the 50 volume, momentum coming out of a squeeze. Relative strength OBV, good, not extended. Carmen, which I think is also in the defense. A lot of the defense stocks looked interesting. Getting ready to go above its 50. Again, big volume, double momentum. Micron, we already talked about. I really like this one. It's obviously much higher risk, but when you look at the multiple versus the growth rate, 14 versus 167, and you're going to be above 200. I think that one goes higher. And then SanDisk, another one in the data center story where um, are they done going down and then the complex is going to reevaluate and go higher? Yeah, I think they got shook up this week when one town said no data centers. Of this, I think the one I liked the best was HWM, but I like the BTSG as well. The other one I like are stocks that are in an uptrend that are in a squeeze or coming out of a squeeze that have either a breakout or momentum signal. And these are some of the ones that made the list. Which one did I want to look at? MDGL is a very strong biotech company. They've got a number of weight loss candidates, and a lot of people expect them to be bought out. What is their market cap? 6.5 billion, pretty high. They don't make money. They've got some low-grade revenue. But what happens is when somebody gets bought, the entire sector goes up, which is why I like being in LABU. If biotech is working, it will go up when there's buyouts, even if it's not in the stocks that they're holding, because it raises the whole sector. So I'm not going to go into all of these, but these are nice patterns as well. Orca, I think, is a gold stock. Let's see. There's another healthcare. Sideways move to the 50 and a breakout like that a lot. And Intuitive Surgical, I had surgery last year. I used their robotics for my surgery, or the surgeon did, and boy, it changed. I was out of the surgery, out of the hospital within 24 hours, on my feet in 3 days, and back to work in 7 from a pretty big surgical procedure. So there's a lot of things that look good. Top down, bottoms up. Sometimes they meet together, and I think there's a number of things we looked at that look interesting. We'll see you on Monday. Just the big asterisk. I titled this one for a reason. My gut feeling is that Santa is here and that we run up through this week and maybe into the new year. When we get to the new year, we're going to have people selling their winners to pay their taxes. So the first couple of weeks of the new year might be interesting as well, but more volatile. This could have just been quadruple witching. Try and get some confirmation. Be careful. Be safe. Um, and we'll see you next week. Actually, we'll see you next week on Monday in 2 days.